Did you know that in the last 5 years, the total value of mutual funds in Nigeria has grown by over 300%, reaching nearly 1 trillion naira? Or have you ever wondered why some entrepreneurs seem to build wealth steadily, while others struggle to keep their businesses afloat? What if the secret isn't just hard work, but making your money work for you? Imagine a financial tool that allows you to invest, grow, and diversify your wealth without needing to be a financial expert. Mutual funds could be that secret weapon. For Nigerian entrepreneurs, mutual funds are more than just another investment option. They're a powerful way to build financial security, grow your business capital, and create a future where your money generates more money. Whether you're running a small bakery in Lagos or a tech startup in Abuja, mutual funds offer a way to pool your resources with others, giving you access to professional management and a diversified portfolio that would otherwise be out of reach. But let's face it, building a business in Nigeria isn't easy. Entrepreneurs face a unique set of financial challenges. Access to capital is often limited, with banks demanding hefty collateral and interest rates that can choke a growing business. Even when you have a little extra cash, knowing where to invest it safely can be overwhelming. Many entrepreneurs keep their savings in traditional bank accounts, earning minimal interest simply because they don't know what else to do. The fear of losing hard-earned money to risky ventures or scams is real. On top of all this, there's the challenge of balancing business needs with personal financial growth. How do you ensure you're not just working for your business, but that your business is working for you? This is where mutual funds come in. At their core, mutual funds are investment vehicles that pool money from many investors to buy a diversified mix of stocks, bonds, or other assets. A professional fund manager makes investment decisions on behalf of all participants, aiming to maximize returns while managing risk. For entrepreneurs, this means you don't need to be a stock market guru or have millions in the bank to start investing. There are different types of mutual funds to suit various goals. Equity funds focus on stocks and offer higher growth potential, but come with more risk. Bond funds invest in government or corporate bonds, providing more stability and regular income. Money market funds are low risk, investing in short-term debt instruments, ideal for preserving capital and earning steady returns. There are also balanced funds, which blend stocks and bonds for a mix of growth and safety. Take the story of Chinedu, a Lagos-based entrepreneur who started a logistics company with just 2 delivery bikes. Like many, he struggled with cash flow and wondered how to make his profits work harder. After attending a financial literacy seminar, he learned about mutual funds. Instead of letting his business profits sit idle, he began investing in a balanced mutual fund, contributing a portion of his earnings every month. Over 5 years, his investments grew steadily, even as he reinvested in his business. The fund's professional management meant he didn't have to worry about picking stocks or timing the market. What's more, during a tough season when business slowed, he was able to draw on his mutual fund returns to cover expenses, avoiding costly loans and keeping his business afloat. Chinedu's story isn't unique. Across Nigeria, entrepreneurs are discovering that mutual funds can provide a safety net, a source of business capital, and a pathway to personal wealth. But perhaps the most inspiring story comes from Ifeoma, a fashion entrepreneur in Abuja. Starting with a small stall in Wu's market, she dreamed of opening her own boutique but struggled to save enough. Through a local entrepreneur network, she learned about equity mutual funds and decided to invest a portion of her profits every month. The first year was challenging. The market was volatile and returns fluctuated. But Ifeoma stayed consistent, continuing her monthly contributions and learning more about how the fund worked. Over time, the power of compounding kicked in. By the end of her 4th year, her investment had more than doubled. She used part of her returns as a down payment on her boutique's rent, while the rest continued to grow. Ifeoma credits mutual funds with giving her the financial discipline and growth she needed to turn her dream into reality. Her strategy was simple: start small, be consistent, and trust in the long-term process. So, let's recap. Mutual funds aren't just for big investors. They're accessible, professionally managed, and offer a range of options to suit different risk levels and goals. For Nigerian entrepreneurs, they provide a way to overcome financial challenges, grow business capital, and build personal wealth, all while benefiting from diversification and expert management. Now, we'd love to hear from you. Have you ever considered investing in mutual funds, or do you already have experience with them? Share your thoughts and questions in the comments below. And if you're ready to take your investment knowledge to the next level, check out our next video on smart investment strategies for Nigerian entrepreneurs. Your journey to financial freedom could start today.